All right, bet. So we got like weekly markups that we're gonna go over, and then just so the first thing I had to say was this. So if you go to cnbc.com, especially for the people who are like trading indices, I don't know how it works with currency pairs yet because I don't really trade currency pairs off fundamentals. But indices, if you go to cnbc.com and you come over here to markets and you go down to US markets, so they have like, if you look here, they have like the indices up here that are like related to the US markets, right? So if you just go to Dow 30, this is what I've kind of been doing like this week to trade US 30. So I come on here like right as, because it always refreshes as soon as New York opens. So like the second New York opens, it's gonna go blank and then it's gonna refresh with all of the daily. This is all the top currencies that are traded on the US on the Dow 30 right now. And it'll show you the outlook for what it's supposed to be for that day. So like this is from Friday. So when Friday, whenever it refreshed, it showed us, all right, so AX is bearish, AMGN is bearish, and like so on and so forth. So basically for this, all you're looking for is you're looking for the thing that is most overbearing on here. So it's either going to be bearish or bullish. So if we see that all of these stocks are red and they're showing that they're going to be red for the day, then most likely our outlook on US 30 for the day is going to be more bearish. If we're looking at it from a perspective where like 70% of this is green, then we're looking at it from like an outlook of what's called US 30 is going to be bullish. So it's been doing like, I've kind of just been testing it all week. And for the most part, it's been pretty accurate with like how things are going. So we had the 17th. So this is 9:30. So 9:30, we were playing at this key level 35,750. As you see, this was the news from Friday. As soon as it refreshed, it showed that the stocks for the day were most likely going to be bearish, which is why we see heavily bearish on the stocks. And then what do we see on US 30? The exact same thing. Given that the majority of the stocks being traded are bearish, it makes it to where the sentiment is most likely going to be bearish. And the whole entire day, starting from 9:30, we were just falling off on US 30. So like for the most part, it's going to be pretty accurate. And again, you're not just relying on it just to trade off of that. You put that with the other confluences you have with your technicals, and it just gives you a better outlook as to how the markets can be flowing for that day and like a insight of where to look at. But yeah, I've been using that for Dow 30. They also have one for NAS. The NAS one, it's a little bit more complicated because you're trying to count more stocks, but I usually just use it for US 30 because that's 30 quick stocks that you can look at. You can see whether the majority is bullish, the majority is bearish, and you can use that along with what you already have in the markets to give you a better sentiment to be on the right side of the market. Other than that, that was like the most important thing. Just markups for the week. So just like I was like talking to Rico about, I'm probably trading like Monday, Tuesday, and then like I'm done for the rest of the year because this time of year, like market's gonna get choppy around Christmas and the holidays and New Year and all that. So I might as well just wait for the markets to give us like a better sentiment as the year comes in to see what we're gonna start doing for next year. For GU, my drawings here. So usually everybody know how I do the markups. I just go monthly high and low, and then weekly high and low. And this is how I always do my weekly markups because after that, I'm not really looking higher than the 15-minute like during the week. So we got our monthly high and our monthly low here. Monthly high, monthly low. And so this is basically what we're looking at for our range of the high and the low for the month. Then I hop down on my weekly, do the exact same thing. So given that I see that my monthly high and my weekly high are the exact same level, and given that our monthly low is almost close, like it's pretty close to what would be this weekly low, I'm gonna just leave that alone. And I can hop down and see just the outlook. So it looks pretty, like overall, we're looking pretty bearish on GU. Again, we did respect this low level monthly low. Now we are starting to try and create a trend to the upside. Potentially, we're already dropping into an order block as this week closed. We were dropping into this order block. So we can see how market's going to open and how it's going to react off of this. If we do get a good reaction off of this order block, sometime between market open and like Monday during London session, we could potentially be looking for buys back this week, which is most likely what I'm going to end up waiting for. I don't really want to continue selling this given that it is dropping off like heavy. So I'm going to be looking for buys somewhere around this zone, see if we can see a reaction here. And then again, like I'll explain a little bit later, the CHOCH and flip that I've been using on the 1 minute just to get my entries. but that's my main outlook for GU. We hop on EU real quick. That thing, remove drawings, monthly levels. Monthly high, monthly low. Hop down on this weekly. All right, same thing here. So the monthly high and the monthly low are actually the exact same thing as the weekly high and weekly low. So EU moved like hell last week. We can hop down on this 4 hour, even though it did move like crazy to the downside. We did see that we ended off in this range on our 4 hour. I'm kind of liking this range. I think that EU probably will continue to sell off. We have a whole lot of bearish sentiment. And again, we've already swept the highs here with this wick. And now we're starting to sweep lows back to the downside and create lower price action. So I see that we can potentially start to drop lower on EU. Probably be looking for sells on that this week. Up down on my 30. Yeah, there's a lot of places of imbalance, and we reacted off of this previous order block up here. So I'll definitely be looking to sell EU. I'm not sure where my entries will be off of. I kind of want to see how the market opens up, but I'm seeing lots of levels of imbalance inside of these candles here for potential places for the market to reverse and show us entry on a lower time frame. That's my ideal outlook on EU. We got GJ. GJ been on some mess with me. It's not liking me. I haven't been able to catch anything for probably like the last week. Kind of just had setups like run on me and then not tap my entries. But we have our monthly high and our monthly low already set here. Weekly low set here as well. See how that 4 hours looking. All right, 4 hours for GJ. Again, same thing for GU. So they kind of move in confluence with each other. So I trade them similar. We are creating now this what looks to be an uptrend. If you're trading retail patterns, we're looking to create this trend and then potentially go to the upside. I see that we have blasted through this order block here on the 4 hour. We also closed very bearish at the end of the day on Friday. So like my next outlook would probably be seeing how it reacts to this weekly low level, unless we of course do begin to push up, because again, we created a huge 4.
I'm about to say that's a I got a trend line, right? Going from the bottom.
Here.
On the low, yeah. And then trend line it up. Yep.
All the way through the wicks, or
yeah, through the you can leave them on the wicks, but either way, you can have them touching body or wick. It don't matter.
I'm gonna go through the top 3 wicks because this wick out doesn't really phase me for that.
So that one had right there, and then I was gonna say, because this is what I was trying to show you on GJ, because I caught this buy from right. I'm trying to look at my screen at. Here we go. 149880. My fault, and I ain't trying to take over.
No, you're all good. You're all good. 149880.
149. Do 900.
So you got your entries here. Are you gonna buy right now, or did you hold?
No, I got out.
Okay.
So right now, like I got a channel in one. Hold on, wait. I'm gonna just do this so you can just briefly look at it.
Say less. Let me see. Quick.
That way, I'm not trying to talk too much. I want you to run this joint. I'm sending it right to the chat, so you can just look at it real quick, yo. That way, boom, boom, bam.
Okay, gotcha. So you have this downwards channel here, and then okay.
Y'all, and I seen it wasn't trying to break. It was staying just on top, so it created another channel, and then that breakout, and then obviously it took off.
Got you. Okay. So are you is your sentiment bullish still on GJ?
I'm looking for unless it's a break in there. So like right, because I got a trend line right at the bottom.
Okay,
like,
got you.
I just visualize it. That way I just see, like, you know what I mean? I can tell
trend exactly.
So exactly how you set it up. But because I didn't want too much lines, actually I can delete all this other stuff. But yeah, that trend line is right there. And then I'm looking forward to either I'm looking for a break, to be honest.
Got you. Are you looking for these?
To the downside.
Okay,
yep.
I got you. I know exactly what you're looking at then.
So I want to say the 4 to 9. I want to go back to 900. Where was it at? Yeah, 14.
Nah, yeah, 149, 900 down here.
Yeah, or at least 8. You know, always.
Gotcha.
Yeah, at
Yeah,
least.
them whole numbers.
But
So
go ahead.
yeah,
It's back on you. But yeah.
so the same thing with that, just like Rico was talking about. So he sees this break again. We're looking at this trend line. Retail, they most likely want to take retail out. And again, this is the worst time of year to be trading, especially like long-term trading. Like if you're not in and out within the day, it's really hard to trade in this Q4. So he could potentially see a drop down here and then potential buys up here. So again, I have my weekly low level down here. So that is a potential. And just like we talked about, it reacting off of the weekly low. And if not, if it is to, let's say, push up, then again, I want to see what we do at this order block here, because this is a 4-hour order block. So I want to see what we do inside of this range. If we get a reaction to the downside off of it, then I can potentially look for a CHOCH and flip entry order inside of there. Or if we continue to blast through it and we start to break the monthly high, then that'll give me sentiment that we most likely want to either come take these imbalances out or potentially target higher price action to end the year off and start the new year. So yeah, DJ can give probably some really good entries this week.
And then if you look at this right here, bro, it can go either. Like I just looked at this too on a higher time frame on a 4-hour, but right here, this actually looks pretty solid too. Something of this nature right here.
What up, Brian?
What up, Brandon?
Yo, I'm gonna be on mute, fellas.
Yeah, you Gucci.
All right.
Oh yeah, we reacting this lower. Yeah, so either we gonna break out, because if we break out, I think we can get like 148s, like something down there.
Yeah, that'd be insane.
Especially
go back to 148 and then shoot up.
Yeah, if we get to shoot like 158 levels, 157 levels, again, DJ usually likes to start the year off bullish. It's almost every year it starts it off bullish. So we'll see exactly what it actually wants to do here.
But look how much, if you scale out like on your chart, look how much area to fill it has though. Yeah, right there, boom. Possible, like nothing came back in that area.
If we break all of this, that's just liquidity.
Yeah, that's just drop.
Orders all down there. Yeah, we got orders all over.
And look how much liquidity is built up at all those lows though.
And so many inducement levels. Like this whole trend is full of inducement. Never pull back to fill order blocks. Never pull back to fill 50%. So we got a long way to go, especially if we want to start dropping off. Yeah, GJ might be a pair to really be looking at, especially starting the new year, because this thing can move next year, especially with the way the world.
Hey, bro, you better stop playing with my girl. Don't do it.
Gold is another one that I'm looking at this week. Again, I'm keeping it simple to end the year. I'm looking at literally gold and then NASDAQ 30, but them indices, we'll see what they do it now.
So tell us how, because I know gold just took out. I think it just took out all the equal lows that was collected there on. I'm on the 1 hour. Let me scale it to the 4 hour. The 4 hour too. Or actually, it looked better on the 1 hour, but the 4 hour, I had equal lows up at the, right up in a little bit lower, right there. No, my fault. Up at that 17. Yeah.
Okay.
So if you scale down, actually, wait, is this gold?
Yeah, I'm in the gold trade right now.
Why does your gold look different from mine?
What's your gold look like?
Oh no. That looked good right there. 4 hour. Yeah. So bam, all those equal lows right there. Flop, all the equal lows, and then you go to the left still. Even on the left-hand side, you got all these lows right here. It's been rejecting off of.
Makes sense.
So I do see a possible retracement back, take out those lows, and then a continuation. Yeah, bullish momentum.
Exactly. So that's what I have on the so the hourly, when I'm looking at gold, I'm looking at gold to potentially even come down to like 1784 and then potentially 1766. But like once we start getting down here, like this is starting to move towards like bearish price action. So like those are potentials, but the main one I'm looking for is 1784. Gold took a huge dump, and it has a whole lot of we have a whole lot of imbalance to fill and orders to fill. Down and through here on the 15, on the 30, on every time frame, we have clear price action for gold to continue to melt and continue to fall. I'm still in this gold trade from the week. I took this one on Friday. This is my TP here, 1795. I might just leave a runner down here, but again, moving towards the end of the year, them charges through the first, I'm not really trying to hold those over, but I can see gold actually melting, and it will probably have a lot of opportunities in there to catch more entries. The main thing I was like looking at though is like the way that I've been getting these 1 minute entries is that shock and flip. So I think I sent.
Run us through that.
Right, so basically, there's one video that I'll send y'all like that explains it like almost perfectly. So these are like more examples because once you watch the video, you're gonna understand, like especially with the way that we look at price action and trade price action, like you're gonna have an idea of already what's happening. So basically, what you're looking at for the chalk and flip zone. So you're gonna have like two ways for it to look. So you're gonna have this way where you're gonna have higher highs, higher lows, higher highs, break a higher high, break the most recent low that was created, and then you're looking for the tap back in order to take it to the downside. So this is what you're looking for on your bearish entries for chalk and flip. And basically all it is here's your chalk, which is your change of character, and then here's your flip, which is the bottom side, because we're flipping over the previous zone in order to take price action to the other side. So basically all it is saying is you're creating highs, you're creating highs, you're creating highs. And then basically in order to create orders in the market, all that the banks are doing is taking that price and taking out the previous lows, because again, you have to remember buyers are buying all through here. Buyers are buying all through here. So we have buy orders sitting in the market here. Price action comes down, takes those buy orders out, which is what creates the flip, and then trades back into the inefficiency, because again, this is where we started to print out seller orders, which is why you always have to see the first move break the first higher high and the second move break the first lower low, because it's showing that bearish orders are now being pushed into the market, taking out all of these previous buy orders and sell orders that are again being printed. And then once we take the low, we're taking all of those previous buy orders, collecting those to fake out. Again, people are buying again in this other buy candle that's creating the second leg, and then a flip to the downside because the sellers are still over dominant in the market. So that's your first example of it. There's the high side one, and then you're going to have your seller side one as well, which is just downwards price action, lower lows and lower highs. Then you're going to take the high, take the previous high, and then trade back into the range before taking off price action, and your flip zone will be in here.
Hey, so you actually could have been in this trade right here earlier then, right?
Oh, so much.
Because this looks smack. This is like exactly what I've been learning. But like, I'm trying to remember how to annotate on here just to highlight it, and then I'm gonna let it go.
So you can anything in this price action, and that's why I love being on the 1 minute now. Any form of price action creates chalk and flips. So again, your most dominant chalk and flips, and the ones where you're going to catch your 1 to 40 Rs, 1 to 50 Rs, and things like that are going to be where we're reacting off of key levels. Again, this trade example that I had on Friday was a prime example of what that would look like. But again, we're on the 1 minute, so price action is moving at crazy amounts of pace, especially on gold, on US 30, on NAS. So you can see multiple entries in between here, which is why again it's important to have a plan and to have like a trading time, because you will sit here and you can sit here all day. I promise you, you can sit here for an 8-hour day and find a million entries inside of the 1 minute just off of this.
Bruh,
a million times a day.
Zoom, like stretch it out just a little bit. Stretch out. My fault, not in. I meant expand. My fault.
Hold on. You want like the whole price action or?
No. Go back to that chalk, to the change of character, right at that move. Go up. Yep. Zoom into that area where the first change of right up in here. Yup, right up in there. So this what I was looking at right here. If I want to see if it's if it's hitting that order block right here.
This one right here?
No, this one. Damn, it just missed it.
That one down inside of here.
Yeah, because that right there, I was looking for. That's a. Hold on, shit. I can't delete it. Damn, I need water. My fault. I was looking for that order block right there, like right that last move. So you know where you got to change your character at, where you got the flip.
This CHOCH and flip here. Yeah.
Yeah, and then you got the Lash Bears move up in. Yep, this area. I'm over there. I'm pointing to it like you can see it, but right where that green box is.
Okay.
So I was looking for that order block up in there and seeing if that's where
Price
market
action want it to come to. Okay. So
it
you
came
can
up in that
find,
area.
like, yeah, I know what you're talking about, just inside of this area up here.
There we go. Now I clear it. Yeah.
Okay. So basically, you're going to get entries where you can find that. And again, this is why I say CHOCH and flip, it can happen in a million different ways. But you're most like the entries that you're mostly going to catch are going to look like this, where it's literally leg to entry. Like it's move, snap to the upside, snap to the downside, create your CHOCH, your flip, and retrace back into it. So again, this is why this trade, like this trade panned out almost exactly how you can see how it can be invalidated. Because again, you're on the 1 minute time frame, so a million things can happen, but it's not always going to give you the proper entry. So as we can see here, price action is moving to the upside, right? We see we have upwards movement, downwards movement, creating these higher highs, again, just like the model shows, creating these higher highs and higher lows. As we see here, again, I marked out the entire range because I had seen this kind of late and price action was already here once I started to see these start to form out. But we could even define this even more if we wanted to look for the CHOCH and flip inside of here. So we have this high right here broken. Again, we have a high being made, we have a low being made, we have this high here that's being completely broken. And then
that shit is crazy.
We also have, if we go on the other side, again, we have these lows here. And this is why I say it's not get most of the time you want to see these clean, clear cut entries, which is exactly how we ended up getting our entry. But you can see these inside of here. So you have a flip zone here that technically, if you want to count this as a break, you can, and you can try and play it off of here, which is what most people would try and do, because again, you're going to usually get the price action back to back. So you have that CHOCH zone there, which broke this high, the lower low came up and broke this high. You have this low now that's been broken. Again, it's just been tap broken, but it still has been broken. And then what are we looking for? We're looking for the flip zone in order to give us our entry. So the last bearish move, that's what you would take. And then you would be looking for your 25% to 75% to get tapped, and you would have a limit order set, usually either here or the 75%. Again, this is where you have to feel it out with your strategy, whichever one you want to take. I usually just split an order. I'll go 50% on here, 50% on here, and whichever one gets tapped, if both of them gets tapped, I'm risking 1% or 2%, however much you put on those orders. So
Damn,
again, you're looking for that 25 to 75. If we're looking for 25, we don't get tapped here. So this is why I see here, all right, we don't get tapped here. So this is usually what, for me, is called inducement, where we create a CHOCH and flip zone, creating a flip of character, but we never come back to tag in the orders. Again, we didn't fill this order block. So price is induced. This is how you get FOMO traders and things like that to hop into the market. So we just delete these two CHOCH and flips. We see the overall CHOCH and flip again, higher high, higher low. This high right here is being broken by this whole up move, which is creating this CHOCH. And then this down move here is what's being broken. So I see, all right, price action here, doing what it wants to do. Hold on, refresh this real quick.
Right, yeah, because I've been scalping on like Bitcoin. And I've been doing this move right here. I've been killing with this, like this
over and over again.
Yeah, like so you see how we got this move right here, the rally, like drop base drop, or like rally base rally. And I've been bro, I've been trading just like that, bro. So all this, and I've been doing it on a 1 minute, how we're looking right now. But like you putting it in, and I need to get your what's the names, the for your zones, for your what is it called?
What's it called? The fibs?
Like the fib, yeah.
Okay.
I need those settings.
So yeah, the what's it called? So CHOCH and flip here, and then what do we have here? Another one to the downside. We have now the low being created. this high was never broken. So this is my change of character to the downside. We have a push here that creates our flip zone, breaking this high. And again, these are entries that you could be trying to take back to the upside. So we see that we come down, we never actually tap this entry. I don't count this as a retrace because usually it's going to give you a couple of candles that go up before pulling down. If it fills instantly, then again, you can try and catch this move, but that's not the move I want to catch. So this is another form of inducement here. Orders never came back down to grab liquidity. So given that I know that we have inducement here on these lows that I'm looking for, and we've already reacted to my overall 15-minute zone here, because this is on my 15-minute, I was targeting previous price action, which is where gold had came up to, this order block in here. Once we drop back to our 1 minute and understand that, now we're looking for entries. I already know that I have inducement down to this low. I know that orders are coming up to try and take out this price action, and I'm looking for lower price action right now because we've already shown that we don't want to flip down here. We have inducement up here, and we also have inducement down here that has now broken out of our zone. So this is where we start looking for, again, if you're looking for bearish price action, what are we looking for? Look for higher highs to be made, a break, a retest, and then go to the downside. After this inducement happens, we have a break of structure to the upside. We have a break of structure to the downside. Now, what are we creating? Higher highs. This high is broken. There goes your CHOCH zone. This low is broken. There goes your flip zone. This is where you're getting your change of character. And now you're looking for price action to come back to your CHOCH and flip for your entry. Exactly what we talked about again in the example. So price action runs. Again, at this point, this is where you're starting to look for your entry. I usually take the first bearish candle that, 1 second. So usually taking, what I take is the first bearish candle that comes after the downwards move. So for this instance, we had the downwards move here. The first bearish candle after the downwards move was this candle here. So 9 times out of 10, I would take this right here. I would just take body to body of the candle and pull it out. Now, for this circumstance, given that we had a wick that tapped into our zone and we also closed still in our 15-minute zone with this bearish candle, I was going to have to take the body to the wick in order to account for everything that was in the zone of price action that we were looking for. So rather than do that, all I did was move to the next bearish candle because, again, the next that's a clean range. From there, I can take body to body, and then I can play my entry off either 25% or 75% of the zone. Here, again, I took on my broker, I took body to body, and I played the 25% zone. And as we can see here, what does price action do? It comes down, just like we talked about in the example, breaks the high, comes down to the low. We're looking for a retrace back into that order block or into that flip zone in order to grab our entry and then go. And from here, this is where you just look at your 15-minute, whatever you like to trade for to find your zones of target. So if I hop on my 15-minute, I was already seeing here that we had broken out of a range. We were coming to the downside. Also, on my 1 hour, I was looking at this price action here. So we had pushed to the upside. We had made this huge change of character and then a push to the downside. So this for me, again, retail traders are going to look for a perfect. This is what a inverse head and shoulders for me. So I was looking for us to already fill the range back to the downside, at least to this previous liquidity. So that's exactly where my target was. I targeted key level 1795, and I'm waiting for this trade to eventually hit TP whenever market does open back up today. But I'm looking for 22R on this trade. And so this is how, again, you can redefine your trades and make your 1 to 3s, 1 to 4s, like 1 to 15s, 1 to 20s, just by going down to the 1 minute and doing the same exact thing that you're doing on all your other time frames, except again, the 1 minute is just closer price action and it moves a little bit faster. So you take all of your higher action or your higher time frame confluences, and then you scale down to your 1 minute. And I just look for these CHOCH and flip zones in order to take my entries and get a tighter stop loss, a much better and cleaner entry. And again, you can take one of these trades a week and be done rather than having to trade every single day for a 1 to 3, 1 to 4, when you can just scale down to the 1 minute and do the exact same thing, look at the exact same price action just from a smaller standpoint. But that's like the main thing that I've been working like these last 2 weeks. And again, like after this, like I said, after this Tuesday, I'm going onto a demo again and just redefining, like trying to make my strategy as best possible for 2022. Because again, like this is just another thing that helps. Like a 1 minute, you can catch one of these a week, 22% a week. I mean, I don't know about y'all, but not 95% of us are done at 22% a week. Like that's beautiful. And again, you can be monitoring your trade however you want. Usually what I do is at 1 to 5 through 7, like 1 to 5, 1 to 7, I take 70% off the table and I'll leave the rest running at break even. Given that I had already had a great week, I wasn't risking anything with this trade because I had already moved to break even at my 1 to 7. These are the ones that you can just hold and say, all right, I've already made my profits for the week. I don't mind holding this one. And again, you can end up with a fire trade that you're holding basically risk free, that you can find 1,000,001 times just in a single session because it happens over and over again, and price action comes and follows the exact same things. Yeah, it's those are like the main things for this week. If any of y'all on here have any like pairs y'all would want me to look at or look over for the week, I mean, we're open for questions at this point.
I was about to say, that's fire. I was talking, my mic was muted. What's the fib settings? Because I'm trying to draw my sample right now. That way I could just have it. And then dog, I see so much though, bro. On that 1 minute
so
is
many opportunities. And that's why I said I'm like fixed now. So now that I'm home, I'm trading London now. So I've been trading like the first 2 hours of London. Fire. If you can trade London, if you trade Forex pairs and you can trade London, I 1000% recommend it. Setups, especially if you're trading this strategy, there are setups so many times before London and during London, like millions and millions of times where setups just happen. But I'm kind of sticking to like the first 2 hours of London, and then I can trade New York for like an hour to an hour and a half. Usually after that, I'm closing like trades. I'm not letting most things run, unless of course it's like an occasion like this gold trade where you just see an opportunity and you just take it.
Bro, hold on. All right, so black. I'm about to do mine like yours, bro.
So Miles,
What
you use the 15 for your zones, right?
I use the fib tool, yes.
Okay, what's your best technique to find the zones that you're interested in looking at price action from?
So 15 minutes. So like I had explained in the beginning, so usually when I'm doing my Sunday markups, I look at the weekly and the monthly time frame to give me one, my range that I'm trading in, and two, to look for the places, like look for where the market is going. So give me a bullish outlook on the week or a bearish outlook on the week. So from there, as soon as the market opens on Sunday, I think it opens for 5 o'clock Eastern, it's 4 o'clock my time. But basically, as soon as the market opens, I don't move from the 15-minute. So I try and stick myself to the 15-minute time frame. Rico, are you good on the fib setting?
Yeah, Gucci.
Okay, yeah. So basically, just to show you, I stick to the 15. I don't move from the 15 because I'm trading 1 minute setups. And usually when I'm in the market are at high volatility times and I'm already looking for a setup to be presented to me. So I'm looking at that 15-minute time frame, no higher than that, because you really don't need it. This is where, again, I sent a video to what's called a 3-box method that I've also been using. But basically, all the 3 steps to it are you're finding your range. Step 1.
Yeah, I saw your 3-box setup.
Yeah. So basically, you know exactly how that works. So with that, again, you're looking, as soon as you find your range in your S&D zone, what I'm looking for, I'm just waiting. I'll set an alert at the top of here, like right before we get to the S&D zone. And I'll basically just put a range out there. And I'm not looking for entries unless we touch into my S&D zone, because I know that's a high probability zone for me to be trading from. So that's how I redefine down, and I know what zones are going to be strong because I've already redefined to my 15-minute order blocks, my 15-minute inefficiency. And once we tap that zone, I'm onto the 1 minute. I don't move from the 1 minute. I'm looking for a change of character, and then I'm looking to take those entries and get my chalk and flip zones inside of this range.
Yes, sir. Okay, I appreciate that, man.
Of course.
Damn, Miles, I owe you dinner, bro.
You, bro, since I've been home, it's a different mindset. Like I can trade in college, but bro, when I'm free, bro, it's a whole different, like I'm just locked in a lot more.
Yeah, because that's oh my gosh, that's fire, bro.
And I'll send y'all a video. Like there's this one video, and basically like he has multiple examples, multiple like chalk and flip entries of like just how it's explained even more in depth, and it's fire, bro. It's fire.
Yeah, this is killer, bro. I
Oh
need.
man, I'm back on mute, fellas.
Yeah,
Oh
yeah,
yeah. And then yeah, NAS U30 again. I just react to these off of price action. I don't have to have a bullish or bearish sentiment because these change day to day. I don't really have to do markups. I have my key levels for NAS. It's every 125 points, and for US30, it's every 250 points. So those are my key levels that I kind of look for, and from there, in between the week, I just trade what happens at 9:30 and what the fundamentals and technicals are giving me at that time.
bro. That go hey, dog. Yeah, I've been loving this 1 minute, bro.
Yeah, man, this 1 minute, man. Woo. There's just so
I've been
like
upping my lot sizes, bro, and catching those little moves, but them shits turn to like 300, 400, 500 bucks like
crazy,
that.
crazy risk to reward. A 3 pip stop loss and on GU, you had a 4 or 5 lot. That's why I'm like, it's not necessarily that I'm not over leveraging or anything like that. It's just once you minimize your stop loss, once you get 1.1, 1.2 pip stops, and I'm learning the one now, but by like June, July, I'm gonna get the seconds chart and I'm gonna try because the seconds it does the same thing on that, same exact thing, and you can just catch tighter entries even on the lower time frame. So just redefining this and making sure that I'm understanding this 1 minute first, and then from there, once you get the seconds, you can catch 1 to 70s, 1 to 80s in the span of a London session, and be done for your month, sitting pretty for the month. So,
Bro, oh my gosh, yeah, that's fired up. You gonna have to, I guess. Well, after your vacation, bro, you're gonna have to get on live because I got to see it in person.
oh yeah, of course.
That way I can see it. Like that's how I learn. You know how I am. But that I'm about to look at it now though, like because market about to open up in what?
About an
I'm
hour
a,
20.
yeah, I'm gonna be a dickhead anyways. But I'm gonna hop on. I'm definitely gonna hop on and scale back down and see.
I've been doing whenever I'm not trading, I'm just back testing this thing, going back in price action, looking and I mean, a lot of people back test differently. The way that I back test, I just look at price action. I don't need to go back to the replay tool. No. I just go and I look at the price action. I look and I redefine exactly what I'm going to be looking for in real time. So in real time, what I'm gonna be looking for again, the 15-minute zones, you're gonna take your 15-minute, you're gonna look for your second, your step one, structural entry, your step two, which is gonna be the zone.
Hold on, wait. Do it over. My fault. Do it over. I was looking at my damn trade. Do it over.
So basically you're gonna be looking at like 3 steps. So when I do my back testing, I don't necessarily look at it from a standpoint of like going back and using the replay tool or nothing like that.
Yeah.
I more of look at it from, we go from step one, go on your 15, look at my structural entry, because I'm looking at what I'm gonna be doing at price action in real time. So here would be a range that I'm looking at. Here would be, again, I can scale down. Here we have a big old wick here. If we move on to the 5-minute time frame, we could probably redefine this even more. So this is, again, a wick. We just don't define the entire wick as our range for our S&D because this has already been filled. This has already been mitigated. See this right here? We already have tapped into our zone. Now I'm gonna hop down to my 1 minute. Find it real quick. Hop down to my 1 minute, and now we're just looking at it inside of the zone. We're looking for buy side sentiment, so we're looking at that downward structure to be broken, and then giving us a chalk and flip zone. What do we have here? We have downwards price action moving. Price pulls back up. Price pulls to the downside. Again, right here, what are we creating? Here's the lower low that was created here. That lower low gets broken by price action. Here's my chalk zone. Right here, that higher high. Here's my higher high right here. Being broken in price action. Here's my flip zone. Now what am I looking for? again, the last bullish move that happened or the last bullish move after the bearish move that has happened, because we're looking for buys here. This is the last bullish move that has happened. You're gonna take it, and then again, this is where you're looking to set your orders. You know price action has moved already. That doesn't matter. You're looking for what you're going to be looking for in real time. In real time, you see this. You see that we have chopped the bottom. You see that we have flipped the top. From here, again, we're on a 1 minute. This is where you start loading up your entries. You see this. I have an order on my 25%, order on my 75%. For here, I wouldn't put an order on those two. I would only put it on the 25 because, again, just like I've talked about before, it depends on the range that you're trading in for whether you target your 25 or 75%. This right here is a very small range for EU. You see that price action going up and down is not a lot. And even if we come and measure it from the top to the bottom, that's like 14, 15 pips if we get the whole thing. So it's like a 14 and 15 pip range. I don't need to take 75% of a 14 and 15 pip range. All I need is that 25% zone to target. Again, I cover lows. You can play this wick. I'm not doing that because this on a lower time frame has given chalk and flip entries all in here and has also given you actual like bullish price action standpoints from here. Because again, this wick is just the 1 minute. Once we go down lower, you can see even lower price action. I don't need to cover this wick. If we get back down to this wick that has already mitigated here, it's gone. It's a done for. It's a seller. It's starting to sell off. So again, I'm just covering the low here. 2.7 pip stop loss. Again, I would probably round this to 3, especially when you're starting. I would just round it to the next whole number because there's no like, again, the 2.7 pip stop loss to a 3 pip stop loss is not going to hurt you. If anything, it's going to benefit you and give you a little bit more price action for your spread, whatever is happening in the market. Next step, again, just like I was talking about previously, this is where you start to target your ranges, your highs, your lows. Just like we were talking about, most of the time, I'm just targeting the next high of the range. Again, you can target here, all up to your plan, all up to how you want to manage your position. Once we've targeted that high, we just let price action run from there. And again, what is this? This would be a 1 to 22 R. And if we let the entire thing play, again, you could be taking partials, you could be doing whatever you want inside of here. Let's just say you let the entire thing run. How long is this?
A couple hours.
A day and 4 hours. So 9 times out of 10, I'm not holding that for a day and 4 hours. That's just me. I'm trading for an hour and a half, 2 hours, looking for highs, looking for lows. So this is where, again, you can redefine. I can say like, all right, in real time, I'm only holding for a couple of hours. Let me redefine. This is a 1 to 12, just targeting the next high. Let's say you wanted to target this high. That's a 1 to 10. Let's say you just wanted to target higher price action that's in the range of the 1 minute. You're already taking 1 to 4s, 1 to 5. And again, these are 8 to 9 minute setups that are happening right in front of your eyes. And if you're just holding for a longer period of time, it's going to be even better. Again, an hour and 23 minutes. If you can't sit there for a 1 to 4.6 in an hour and 23 minutes, I don't know what else to tell you. Let price action tap you in. Once you break the high, again, that's how I manage. Once you break the high, either take 70 or break even and leave the rest to run and walk away for the rest of the day. You're good. 4.6, 5%. And this is how you just define those entries and get higher price action, higher risk to reward in a small amount of time.
Bruh. That 1 minute about to be ill again. Just bringing back memories.
Yeah, man.
Damn. Yeah, you about to have me look at them videos all 2 days.
And can you show me one more time how you chose your box setup?
Yeah, for sure.
How you chose that specific box?
So again, this specific box, this is at 6:15. So this is a trading hour. If you were using it 6:15, the first box, all you're taking is the lowest price action standpoint in the market and the highest price action standpoint in the market that has happened. Like the first and second one has happened in front of your chart inside of the hourly range that you've been trading in. So again, if I hopped onto the chart at, again, this is around 12 o'clock. So we see, even if we hop, let's just move back to 9:30, right? So let's say you hop on at 9:30. Here would be your 9:30 range. You would still be targeting the same thing. As price action moves up, again, this is how you just define your box. You redefine your box. You start looking for it. Because I don't see any other entry or optimal trading setups that would be looked at from a different high or a different low in the market. So if we define here, and we were to move this here, what happens? It gets ran straight through because that's not the actual trading range we're in. Move that thing down here and then just wait for price action to do what it's supposed to do. This is how now we go onto our S&D zone. My S&D zones are I'm looking for places in the market that have imbalances, that have inefficiencies, that have places in the market where we have started order flow, but we've never retraced back into.
So your inefficiency is that wick.
My inefficiency here is that wick because I usually like to look for bodies, but there's all these bodies are already filled here. So I'm looking at this wick because I know that on lower price action, we actually had a body form and things like that, an order block form inside of this wick to actually create that bullish move.
Okay.
So from there, again, just taking wick to wick on this is a 15-minute, and I'm just going to take from this top wick to this bottom wick because this is the inefficiency I'm looking for in this model for it to come down.
And that block.
Yep. And once we tap on the 15, that's how I know to move down to my 1. Because once we've tapped on the 15, now I'm looking for entries. I'm not taking an entry off the 15-minute time. There's no point in doing that. Again, I'm looking for CHOCH and flips to happen because this is what shows that sellers are stepping away from the market and buyers are stepping into the market to look for the next move up to follow and mitigate these previous inefficiencies all up here.
Yeah. Okay, that makes sense.
So that's exactly what we're looking for. And again, if you want another example, let's look for, go back a little bit. Let's look for the time that I'm usually trading New York. So New York right here, 9:15, 10:45, cool. So wake up in the market about here. What is this? All right, this is like 10:30. So 9:30 is like somewhere up in here. So once I wake up, what do I see with just the price action we're looking for right here? We're looking at this price action right here, this whole range here, because this is all that would be here whenever you're waking up and looking for that New York thing. Okay, cool. So that's your range that you're looking at right there. So within your range that you're looking at, for one, I see that this price action was mitigated. We came down, we pulled it, we made a low, we came up. Oh, we made an order block here that was respected. And then we came up to price action and now we're starting to drop off. So first thing when I wake up, I'm taking the range, which is my first step. This is the range that I see in the market right now. This is the last low that was created. This is the last high that was created inside the market. From there, I can look at my sentiment of price action. We've made higher highs. We respected this high here, made a higher high, but we didn't break it. Then we dropped off to the lows. All this drop off to the lows did was come and mitigate this previous price action here, this order block to the downside. Tapped into this order block that was previously here, and then down here we created a lot of CHOCH and flips. Again, we had a CHOCH and flip somewhere on the 1 minute here to give this move, somewhere on the 1 minute here to give this move. So we know that overall these are some very weak lows down here. Overall, we know these are very weak lows because this is a triple or now creating a triple bottom here, and we know that that's where liquidity is lying. So I'm looking for sells in this market. That's normally what I would be looking for. Again, we created the high, we created the low. I'm attacking the next sentiment that has pushed away from the last place that our range was. Given that our last range was a high, I'm looking for the lows to be taken out. So what are we looking for? This is what 9:45, what 9:30, 9 o'clock, again, sometime in that range. Right here is the last price action point that I see for a potential place for orders to drop off if we are going to stay in the seller's market. And again, this is at what 9:30. This happens at 9:30. We get this push up. Now we see that we're tapped into our zone. Move down to our 1 minute time frame. I don't think it'll let me. Okay, so it's not gonna let me go to the 1 minute because it's like farther back. But basically, hold on, I think I can hop on a 5. Yeah, I can hop on a 5. All right, cool. So 5 minute price action. We're looking for what happens once we get into this zone. So we tap into this zone, just like we talked about previously. We're looking for sell side orders. So we're looking for higher highs to be created in the market, a break of structure to the upside, a break of structure to the downside, and then lower lows to be created. So what I see here just off rip, see there's a high being created here. Here's our CHOCH zone. I see that there's a low right here being created in the market. The flip zone right here. And this is the last place that price action had ran. Again, broke the highs, broke the lows, and then retest back in. Again, this could have been one of your order blocks right here on the lower time frame. This first bearish candle could have been their first order block. And on the lower time frame, you could have caught this sell-off to the downside right here. Again, we already had moved past that. We were in this price action sentiment here. So we were looking at this range to be tapped into. So what happens? We have lows being created, highs being created, lows being created, highs being created. Here, we have this high here ran. Let me delete this real quick. We have this high here in the market being ran, and we have a low being ran. So this isn't necessarily defined for me, but again, as we can see here, we have highs being ran in the market, breaking these highs, but we didn't necessarily get these lows ran, in my opinion, because we didn't get a clear break. This is what I was talking about. Some of the times things will just end up running without you, and this is something that would have just run without me because this isn't a valid chocolate flip for me. Although we did break this high previously, didn't break these lows here, which would have validated it, and we didn't have any other high necessarily to break off of. But again, if you were validating that as a chalk and flip, then you could have taken this previous zone here, the last bearish move that happened in price action, and you could have been trying to place something along there. Again, that's super tight, and maybe on the 1 minute it would have gave us a more valid chalk and flip. But as far as that, it didn't necessarily give me anything for me to see. But your most valid entry would have again been off of this chalk and flip earlier, because this would have been the most prevalent entry for you to take 25%, 75%, cover those highs, which in this case you actually have highs to cover. Again, this is a 5 minute, 8.6 pip stop loss on a 5 minute. You can redefine that on a 1 minute, and then just targeting the bottom side of the range, that gives you a 1 to 6, and then again redefine as you drop down to lower time frames.
That's a bet. I appreciate that.
Of course, bro.
Yes, sir. Yeah, I'm gonna watch this over and over.
Yeah, it's like the main those are the main things, like as far as chalk and flip. And again, I'll send y'all that video going over like the exactly how it's ran, exactly how it's run, and like what you're going to be looking for like every single time. Yeah, I don't got any questions, and that basically wraps up today and the session for today. I will send this video to the, I'm gonna have to figure out how to share this. It's gonna be like a 40-minute video, but I'll figure out how to share this with y'all because we did record it, and then y'all can just watch over this, and I'll also send the video to the Telegram.
I appreciate your teaching, man.
Yes,
Thank you, man. Yeah, I truly do appreciate your time.